Cold open. The 80-event clock SELLAS Life Sciences Group is not a normal stock story. It is a countdown story. The market is not mainly asking whether SELLAS has revenue today. It is asking whether a late-stage AML trial can cross the evidence bridge before the stock runs out of patience. SELLAS said 78 events had occurred in REGAL as of May 11th. The final analysis begins after the pre-specified 80th event. 2 more events do not mean success. They mean the next scoreboard begins. The real question is simple: is SELLAS Life Sciences Group a Phase 3 breakout setup or a biotech trap wearing a green candle? Here is the first micro payoff. The story is not whether traders are excited. The story is whether the next verified company update changes the evidence chain. In a clinical biotech, the evidence chain is the product before revenue exists. That is why a green chart can be useful, but it is never enough by itself. 2. The contrarian thesis, the easy narrative, is trial near readout, stock runs, bulls get excited. The better narrative is harder. SELLAS Life Sciences Group may be one of the cleanest biotech catalyst stories on the screen, but clean does not mean safe. Think of it like a rocket launch. The rocket can be real, the engineering can be impressive, and the countdown can still end with liftoff or a scrub. This video treats SELLAS Life Sciences Group like a probability machine: pipeline, trial clock, cash runway, dilution, market behavior, and if-then scenarios. The mainstream mistake is treating the countdown like a prediction. A countdown only tells you when the test starts. It does not tell you the score. That distinction matters because the stock can move before the evidence arrives, then move again when the actual evidence changes the probability. 3. What SELLAS actually is. SELLAS describes itself as a late-stage clinical biopharmaceutical company focused on novel cancer therapies. That changes the valuation map. For a mature business, you start with sales, margins, earnings, and free cash flow. For a clinical biotech, you start with probability. Does the drug work? Is the trial designed well? Can the company fund the next step? Can regulators accept the path? The 2 key assets are GPS, also known as galanpepimut-S, and SLS-009, also known as tambiciclib. The stock is trading evidence that has not been fully revealed yet. A simple analogy helps. A mature company is like a restaurant where you can count customers, margins, rent, and profit. A clinical biotech is like a research engine before opening day. You are evaluating the science, the runway, the next checkpoint, and the odds that the engine becomes a real business later. 4. The funding battleground. Small biotechs do not live in a vacuum. They need risk appetite. They need capital markets. They need investors willing to fund science before revenue arrives. When biotech funding is friendly, a catalyst-rich company gets more breathing room. When funding tightens, even promising science can become painful for shareholders. SELLAS Life Sciences Group sits in that tension. The company has a stronger cash position than before, but trials cost money and dilution remains a shadow. The macro question is whether the market keeps financing the path from investigational asset to possible product. This is also why the same company can look stronger and riskier at the same time. Stronger cash can reduce panic financing. A higher stock price can make capital easier to access. But a higher price can also mean the market has already pulled future hope into today's valuation. 5. REGAL. The 78 to 80 events set up the pivotal Phase 3 REGAL trial evaluates GPS in AML patients who achieved complete remission after second-line salvage therapy. SELLAS said the contract research organization informed the company that 78 events had occurred as of May 11, 2026. The 80th event triggers database lock, blinded review procedures, statistical analysis, unblinding, and top-line results. SELLAS also said it remains blinded to outcomes. A high event count does not tell you the result. It only tells you the readout machine is approaching the next stage. The market can see the door. It cannot see what is behind it. The hidden risk is interpretation. The 80th event will start the next process, but it is not the top-line result itself. Database lock and review steps still matter. Viewers should understand this sequence so they do not confuse an event count announcement with a clinical win. 6. GPS explained simply. GPS is the lead asset. The simple explanation is that GPS is designed to train the immune system to recognize WT1, a protein SLS says is present across many cancer types. Do not let science words bury the stock logic. The market is not paying for a nice mechanism. It is paying for the chance that the mechanism can translate into meaningful survival data in a difficult AML setting. Mechanism is the map. Trial data is the road. Regulatory acceptance is the destination. The GPS question is brutally simple. Does REGAL show enough survival benefit to matter? Keep the language clean here. GPS is investigational. It is not an approved commercial product. The point is not to declare success. The point is to understand what the market needs to see next. Survival, safety, statistical strength, and the regulatory path are the scorecard. 7. SLS 009. The second shot on goal SLS 009 matters because it gives the story a second leg. SELLAS announced first patient enrollment in a randomized phase 2 trial in newly diagnosed first-line AML in March 2026. The trial is designed for approximately 80 patients and includes two groups, a predictive biomarker cohort and an early resistance cohort. Top-line data are expected in Q4 2026. This does not remove the binary risk around REGAL, but it changes the conversation. If GPS is the immediate spotlight, SLS 009 is the pipeline extension. The bull case improves if SELLAS is not viewed as a one-card hand. This is important for retention because it changes the audience question halfway through the story. Instead of asking only whether GPS wins or fails, the viewer should ask how much SLS 009 can preserve pipeline value if the REGAL result is delayed, mixed, or not enough for the market. 8. The cash runway scoreboard, now the money. SELLAS reported $107.1 million in cash and cash equivalents as of March 31, 2026. The company also said it received $7.5 million in warrant proceeds after quarter end through the Q1 update. Then, in a June 2nd SEC filing, SELLAS said it received about $28.7 million from warrant exercises during April and May. Clinical data is the engine, but cash is the fuel tank. A biotech can have an exciting engine and still stall if the fuel runs low. The cash update reduces near-term pressure, but it does not make financing risk disappear. The fuel tank analogy also keeps the story simple. More cash can buy time. Time can get a company to the next trial update. But time is not proof. It is only the ability to keep playing long enough for proof to arrive. 9. Dilution. The fine print behind the rally. The fine print is share count. The June 2nd filing said SELLAS had 196,632,574 shares outstanding as of that date. That number matters because biotech investors often focus only on the cash coming in, not the ownership cost attached to it. Warrant exercises bring money into the company and can strengthen the balance sheet. They also increase the number of shares in the story. Think of the company like a pizza. The cash can make the kitchen stronger, but more shares cut the pizza into more slices. More runway today. More dilution to measure tomorrow. The dilution point is not meant to scare viewers. It is meant to stop lazy analysis. A biotech can improve its survival odds by raising or receiving capital, while existing shareholders still need to track the changing share base. Both things can be true at the same time. 10. Q1 financials. What the burn says, Q1 financials give the cash story context. SELLAS reported a net loss of $8.4 million for the first quarter of 2026. Research and development expense was $5.1 million. General and administrative expense was $4.1 million. That is what a development stage oncology company looks like: spending before revenue, evidence before commercialization, and runway before certainty. SELLAS also established an at-the-market equity facility that can raise up to $150 million over time, though it said no shares had been sold through that ATM as of the Q1 update. Funding flexibility is a tool and a watch item. This is where the viewer should pause. The company is not being judged on revenue momentum. It is being judged on whether current spending can generate the next piece of evidence. In biotech, the income statement is less like a scorecard and more like a timer. 11. What the market is really pricing this is the mid-video reveal. The market is not pricing SELLAS Life Sciences Group like a normal biotech with slow, distant milestones. It is pricing a near-term probability event with a strengthened balance sheet and a second clinical program behind it. The latest market snapshot showed SELLAS Life Sciences Group near $15.45, market cap around $2.665 billion, negative earnings, and a negative P/E. That means valuation is not anchored to current profit. It is anchored to future evidence. When a negative earnings biotech commands billions in market value, the market is either pricing major future optionality or riding a catalyst wave. That creates the most dangerous part of the setup. When expectations rise faster than evidence, the stock can become fragile. When evidence catches up to expectations, the stock can become explosive. The gap between expectation and proof is where SELLAS Life Sciences Group currently lives. 12. Volume is not validation. The chart matters, but it is not the source of truth. A strong candle can show attention. High volume can show positioning. Options activity can show speculation. None of those proves that REGAL can support the case. Use the chart as a behavior map, not a clinical conclusion. If SELLAS Life Sciences Group rallies into the readout, expectations may be rising. If it fades before the readout, fear may be rising. The final arbiter is not the candle. It is the data, statistical analysis, safety profile, regulatory path, and funding plan. Price tells you what people believe. It does not tell you whether the evidence supports the medicine. This is the best anti-hype rule in the entire script. Price is a vote, not a verdict. The chart tells you where money is moving. It does not tell you whether the trial endpoint will support the drug. That one sentence should be repeated visually, not verbally, during the chapter. 13. Bull case. What has to go right? The bull case is powerful, but conditional. First, REGAL needs to produce a top-line result that improves confidence in GPS. Second, the safety and survival picture needs to support the next regulatory conversation. Third, SELLAS needs enough runway to act from strength instead of desperation. Fourth, SLS 009 needs to keep advancing so the company is not viewed as only one binary event. If those pieces line up, the market may treat SELLAS Life Sciences Group as a late-stage oncology platform instead of a single catalyst trade. The bullish model is proof, runway, second asset, regulatory path. The bull case should stay disciplined. Do not say the company only needs good news. It needs good enough evidence, a believable regulatory path, enough cash to move forward, and investor confidence that the next financing step does not erase the upside case. 14. Bear case. What breaks first? The bear case is not just trial failure. It is a stack of risk. REGAL could disappoint. The result could be mixed. Safety could raise questions. The regulatory path could demand more work. Financing could become more expensive. Share count could keep expanding. SLS 009 could fail to carry the story if GPS weakens. And the market could decide it already priced too much hope before the data arrived. This is the trap side of the title. A biotech can have real science and still become a painful stock if evidence does not meet expectations. The bear case should also stay disciplined. It is not about attacking the company or the science. It is about respecting base rates in clinical development. Trials can disappoint. Timelines can stretch. Capital can get expensive. The market can change its mind faster than the company can produce new data. 15. Neutral scenario. The hardest outcome. The neutral scenario may be the hardest one. What if the data is not a clean win or a clean failure? What if survival trends look interesting, but the details are complicated? What if regulators want more clarity? What if the market gets enough evidence to stay interested, but not enough to re-rate the stock cleanly? That is the messy middle. In biotech, the messy middle creates volatility because bulls and bears both find ammunition. Viewers should not only prepare for a green or red headline. They should prepare for nuance and follow-up questions. A mixed outcome is exactly where retail traders can get trapped. The headline may sound positive. The details may be complicated. Analysts may disagree. The stock may swing both ways before the market settles on a new probability. That is why the viewer needs a framework before the result, not after. 16. If slash then watch list. Here is the if then framework. If SELLAS announces the 80th event, the clock shifts from event count weighting to database lock and top-line timing. If top-line data are clearly positive, the next questions become regulatory path, cash needs, manufacturing, and commercialization strategy. If the data are weak, the market looks to SLS 009, cash runway, and value outside GPS. If the company raises capital after a strong move, the question becomes whether dilution is strategic or defensive. If SLS 009 updates strengthen, investors may credit a broader AML franchise. This is a checklist, not a trade instruction. The point of the if-then framework is preparation. A viewer should know what evidence would increase confidence, what evidence would reduce confidence, and what kind of update is simply procedural. Procedural news can move a stock, but it may not change the underlying case. 17. What 99% of retail misses. Most retail traders focus on whether the stock is up or down today. The sharper question is whether today's move improved the evidence chain. Did the company announce new data? Did trial status change? Did cash runway change? Did share count change? Did the regulatory path become clearer? If the answer is no, the move may be positioning, not proof. That one distinction can save viewers from confusing a hot tape with a better fundamental setup. SELLAS Life Sciences Group is exciting because the evidence chain is close to a major checkpoint. But the checkpoint has not yet been passed. This chapter is the audience reset. After 20 minutes of details, bring it back to one simple test. Did the news improve the evidence chain, or did it only improve the mood? If it only improved the mood, that is not the same as a stronger investment case. 18. Final rating. Great content. High-risk stock as content. SELLAS Life Sciences Group is strong. It has a clear catalyst, real numbers, a live trial clock, cash updates, dilution math, and a second pipeline asset. As a stock, it is still a high-risk clinical biotech. Those two ideas can both be true. The video is worth making because viewers need a framework before the next headline hits. But the script should never pretend this is a simple bargain story. It is a probability-weighted AML catalyst story. The best thumbnail is split. Phase 3 breakout on one side, biotech trap on the other. This is why the topic earns a long-form video. SELLAS Life Sciences Group has enough real source-backed material for serious analysis, but enough uncertainty to create narrative tension. That combination is exactly what long-form finance needs: evidence, conflict, and a near-term reason to care. 19. Closing. The checklist before the candle. Before reacting to the next SELLAS Life Sciences Group candle, use the checklist. REGAL event update. Database lock. Top-line timing. Overall survival signal. Safety. Regulatory path. Cash runway. Warrant proceeds. Share count. ATM usage. SLS 009 progress. If the update changes those items, it matters. If it only changes the mood, be careful. SELLAS Life Sciences Group is not a story where hype should replace evidence. It is a story where evidence can change everything. Respect the upside, respect the risk, and keep the evidence chain in front of the emotion. This video is for education only and is not investment advice. And with discipline. The viewer should leave knowing what to verify next, not feeling pushed into a decision. The edge is not prediction. The edge is knowing which facts matter before the crowd starts reacting to the next headline.